Good morning, traders. I wanted to just give you a little bit of homework lesson, something that will help improve your trading skills this morning. Um, this is a daily chart, and it only takes into account the regular trading hours. So you're not seeing all the overnight movement. This is just from open to close of the normal day session. What I would like for you to do is you can take any of these points where price reversed. Any of these points would be a good point of interest. And we could just pick one. Um, I like to pick one where there's like that little wick there would be like some sort of a reversal pattern that we could look for. And because it's taking out the liquidity on this one here, we'll just focus on this one right here. So we'll see what day it is. It's Thursday, the 16th of May. And then we're going to go down to a 30-minute chart. And we're going to find Thursday rather, the 16th of May. And here it is right here. That's 8 p.m. So we want regular trading hours. The day ends at 4 p.m. New York time. We're going to put a line there, a vertical line at 4 p.m. And then we're going to put another one over here where the day began at 9 a.m. Right there. It's 9 a.m. Okay. There we go. So that's the time frame we're working with based on that one daily candle. And as we expand it out, now we have some intraday peaks and valleys that we can look at. You can see we have an area right there where it took out just a little bit of the high, and then we reversed. So let's just focus on that area right there. I'm going to put a box around it so we can make sure we're focused on that. Okay. Now we can zoom in a little bit more. We'll go to the 15-minute. We got to find our little box. There it is. And we can see price went up. It took out that high just barely and then did immediate rebalance. Came back up. Did not take out a high. Did not make a new high. So that's a signal to us something's about to happen. Okay. So now we're going to zoom in a little bit further to a 5-minute. Find our area again. And we're going to start looking for a fair value gap. Right here we have a fair value gap. And that would be, I'll just take this box and move it down here to highlight that. From the top of this candle here, I wish these things wouldn't be just right in my way every time I click. From the top of this candle right here to the bottom of that candle is a fair value gap. Now I'm going to try to adjust the box without that stupid thing being in my way. There, I can move it. There's the handle. I knew it had a handle. Okay, and we'll move it down here. And let's zoom in. Okay, so you can see from that candle to the top of this candle, we have a fair value gap. So that indicates even more something's about to happen. And then we come back up. Right there, I would not want to get in. You want more confirmation. We come back up. We try to retest the highs. We have another immediate rebalance. It took out both of these candles. And then this consolidation. This is an important consolidation. Then we put up another fair value gap right in this area. From the bottom of that red candle right there to the top of this little doji, we have a fair value gap. went all the way down, and then it came back up, and it never took out this gap. The candle bodies, they tell the tale. 50% would be about here, and you can see that green one there, and went there. So either of these candles would be a great place to enter. And then your stop loss would go right up here above this fair value gap, because it should hold from that point. Now, if we scroll, we can see this wick came all the way up, almost made it to your stop, but your stop's going to be above there, so you would have been okay. But even if you just got in here at 53.40 and you wanted like 5 points, you would have got it right there. You would have got your 5 points. 5 points is $250. So you would have got it. But let's just say you left it. You felt like we were going to go take out some of the liquidity down below. And let's just say you left it. Your stop's here, your entry right here at 53.40 approximately, and we just leave it. We could be in this trade from 53.42, endure all this. This is like 30 minutes worth of consolidation. You could even add to your position, because this is a giant fair value gap right here. If you needed any more confirmation we were heading south, you just got it, because that's a big fair value gap, and it was never even entered back into. So you could start adding more contracts at this point for a push down to take out this sell side liquidity, which we started doing here. If I went back further, I could probably find some area where there was some sell side that it was also taken out, areas of consolidation. So you could take a small profit, $250 on one contract there. You could also take from here 34. Say you took your 250, got back in here at 34. You would be good all the way down to 24, which is 10. That's a $500 move. But you would have to endure that consolidation, which can get a little bit dicey. But you can see we put up another fair value gap here. You didn't get an opportunity because it didn't consolidate. But then we reversed a little. There are no fair value gaps here, but we did have the immediate rebalance, and then a push back down into what this would call, we call that a bullish order block. And we push back down into it. So you would probably be safe to enter there for a little bit of a move back up, but I wouldn't do that. I wouldn't, because you've already made your money. There's no sense in risking it on another trade. So your homework would be to go identify an area where price reversed using the daily, drill down, find a fair value gap, which we have one right here. So now we've got our attention. Now we're looking for another one. We found one right here that did not, this one got pierced, you see. It got pierced, so we're not interested in that one. The first one usually does get pierced, and we're wanting to see these candles hold as the high. These never got above it. So now we're looking for another fair value gap and a consolidation where that fair value gap holds. And you can see we did get that right here. Wicks never pierced it. And you could take profit here, or you could hold on to it for a big move down, $750 potential profit on one contract. And that's how you write your own paycheck with the futures market. Pretty simple. If you go through your charts, identifying those things, you can definitely find them. Let's remove these drawings and let's see if we can find another one. Okay, so we'll go back to daily. Let me shrink that down for a minute and find our chart. Where's our candles? Come on, where's our daily chart? There they are. My goodness, why do they like to hide like that? Okay, so our daily, let's identify another area. This green one, this was just a one direction day. There are places you could probably get in there. This day right here, it had very little movement as far as like that body, that candle body is really, I mean, we had spikes. It would be an awful day to look at, but we could look at this one right here. Okay, so this one is Tuesday, May 14th. Now let's go to our 30-minute. And let's find Tuesday, May 14th. Tuesday, May 14th. And we're starting at 9 a.m. 9:30 actually. 9:30. Put us our line. Market opens at 9:30 and closes at 4. So that's the area we're working with right here. On the 30-minute chart, we can see we made, at the open, we made a low here, traded back down into it. We came back, we took out the liquidity here at 1 p.m., which is usually, that's your silver bullet time. And then we ran up. So we could focus on this reversal as a possible entry point. But this one right here is the big one. This one's at 10, and we do look for a reversal between 10 and 11. So we may be able to find something here as we drill down. But the 1 o'clock hour is one that we should be able to see some good fair value gaps. But you can make money both directions. So focusing on this one at 10 a.m. and we'll focus on that one at 1 p.m. Let's drill down a little closer. Let's go to the 5-minute chart. Now we got to go find our candles again. There's our area. Okay. So the 10 a.m. reversal looks like it actually occurred at 10:25 is when it hit. We have a fair value gap here and an immediate rebalance, consolidation, fair value gap. These 2 points, see how that one doesn't make a new high? That could be an indication that we're going down for a little bit. But with all this choppiness in here, it's a scary proposition. It really is. We're just chopping all around. This is the kind of thing that'll clean an account out in a hurry. But this right here, they call that a Judas swing. They're trying to trick retail traders into thinking price is going higher. We do have the lows of the day down here that are a draw on liquidity. Because if you were long, you probably would have put your stop here or maybe here or here. And price wants to go down and take out those stops. And you can see it did. So as we're watching this, we see that high. It did not get taken out. We have another try to go up and an immediate rebalance with a fair value gap right there. It's not very big, but it's there. It's right here. So we have a fair value gap, and it did not get penetrated by any candle bodies. Any of the top of any of these wicks, you could have gotten short. Let's say we got short at even the bottom of them, like that right there, 52.49. You would be good for a 5-point run. That goes all the way down to 41, but even a 5-point run would be fine. And that trade took nearly an hour to materialize all the way down to these lows. So there's an opportunity there. And now let's look at our 1 p.m. hour. There's our 1. Here we took out the lows from the morning. So this would be our sell side right there, would be our sell side liquidity. I can put a horizontal line there. there. And you can see how price came down, took it out 3 times, even got a little bit deeper just in case there were some more stops down there. And it took it out. And all the retail guys that were long were going, "Dadgummit, I lost my money again." So now we're looking for kind of a rebalance. We hit and we went straight back up, trying to rebalance price there. We came back down. We did not make a new low. We stopped right there. So that's got our attention. From there, we're just looking for some sort of a fair value gap, something. These wicks, if they were overlapping, I would say maybe a volume inefficiency, something to tell us that we're going the other way. Another thing you can look at is recent swing highs. That's a swing high. We took it out. We did a little bit of a rebalance, definitely did with the wicks here. And then there's a tiny little fair value gap there, not much of one, but here's one right there. So let's put a box there. Okay. Now this is on the 5-minute. I'm betting if we were to go down to a 1-minute, we're going to see a little bit more rebalance, kind of like bar coding is what they call it, or you have a red and a green, a red and a green, a red and a green. And I bet you this area right here ends up being a fair value gap. Let's just go look. Oh man, we got to find our position again. There it is. Okay, so blue lines. There we go. We're back in on the 1-minute. A lot of times those smaller time frames will indicate that big move quicker, because by here, I mean, if we were to get in down here, that's 42. We're all the way up here to 50 already. So that's 8 points that you've missed out on if you're waiting on the 5-minute. The 5-minute is more accurate. You have a bigger chance of getting one of these wicks to come down and get you if you're using one of these smaller time frames. But here's our rebalance, our bar coding, took out the stops. No fair value gap there. Came back down, tried it again. Immediate rebalance, no fair value gaps, no volume inefficiencies. Nothing saying jump in. None of this is telling me, oh man, the only thing I would say that's saying anything is that we took out these highs. So this area, a little more bar coding, immediate rebalance. We're looking for our fair value gap. Still don't have one. Still a little ambiguous. And that was the small one on the 5-minute. And it's even smaller on the 1-minute. So that didn't help. So how can we make sure we wait for a good one? There's one here. And I don't know if the 5-minute's going to even have that. We can go back and look. So there's one right there. But we didn't spend any time consolidating or hesitating. Oh, whoa, here's a consolidation. So we have a fair value gap there. We went up, we immediate rebalance, bar coding. Boom, there's a nice fair value gap. Let's see if we got any money left after all this one. So this one's really a nice one because price doesn't trade back down into it. These candle bodies where it starts consolidating like that and it's leaving this fair value gap unfilled is a very good price array. So that would be, I would try to get in somewhere on this consolidation. Let's say we got in at the midpoint, 52.62. And with a 5 point would be 67 would be our take profit. 67.52. We could have a take profit there, right around this area, and we'd be fine. That's $250 on one contract. What you can do from there is look to see, are we taking out a high? Just based on the way these candles look, we probably did go take out a high. or recent. Let's go back to. No, we didn't. 52.70. No, we didn't take out a high. But if you can see, this fair value gap was respected, and then now we have another one here. It was also respected. So let's say you got in on this consolidation, you wrote it up, you got your 5. That's $250. Now we have other fair value gaps to work with. There's one here. And there's one here. And there's one, and there's also one right here. Now this one and this one was not respected, so we don't really need to leave them on the chart. But this one, as you can see, the candle body's never pierced it. So that's an important one. When you join at a fair value gap, you want your stop below the fair value gap, the candle that formed the fair value gap. So your stop would be down here. And you can see you would still be in that trade. So as it came back down to this fair value gap, you could enter at anywhere where price dips into it. You could even put on extra contracts as it dips into it because it should be respected. And then you could get another 5. So let's say we entered the halfway point of this, 64. Price goes up to 73.62. We could have definitely got our 5. 64 would be 69. Right there, we could have got our 5 more. So that's 500. That's $500 for the day. If you wanted to be a little bit more risky, you could add another one when it gets down into here again. It came and retested this same fair value gap one more time. And it's also creating a line here for people that have gone long. They're going to put their stops right there. And that's the job of the market, is to take that money. I bet you the next day, I bet you that gets wicked. Let's see. Almost got it there. That's as close as we got to it. That fair value gap is still being respected. If we turn that into an extend, I'm real curious what's going to happen there. Let's see. Extend right. Okay, and then now let's go back to a larger time frame. There's our stuff. There's that fair value gap. It never got hit again. If you were a swing trader, you could have gotten in right there and left it for several days, never got hit again. That's pretty crazy, isn't it? But that's the homework I want you to do. Identify those fair value gaps at swings. Look at all the candle arrays. How did they form? What did they look like? This this area down here where we were first marking them, you wouldn't really want to enter. Look at that 5 minute, how big it is on the 5 minute, that one right there. But it didn't really give us an opportunity to jump in right there until we got up here. So that, like on a 10 minute, this would be the bottom of your fair value gap. So you could even move it up to there on a 10-minute candle. So we had one here, we had one here. Didn't really get an opportunity to enter. Here we've surpassed the recent high. We've consolidated. This would be a great entry point. You are leaving money on the table, but like if you were to get in down here, but there's no confirmation for you down here. There's no fair value gaps. There's nothing to say. There's no volume inefficiencies. There's no clear indication that price is going to continue up. When all you're seeing is this one bar at a time, I mean, there's no indication that it's going to continue. It could get right there. take out these stops and then just shoot straight back down and maybe try to get some of this liquidity. So you just never know what it's going to do. So you got to wait for that confirmation. And we did get a fair value gap here, so that would be confirmation, but we didn't consolidate. So there's not much of an opportunity to get in. You don't want to chase that because it could still take that out and zoom right back down. So now we get up here, we're capping a high. We're right at it. They're not gonna. It's not gonna get that close to a high and not take out that liquidity. So most of the time it won't. So this consolidation, it's fair value gap consolidation. They're like telling all the people that have deep pockets, time to load up. We're about to go to the sky. And so that's what they do with this consolidation. Fair value gap consolidation. That's the signature. That's what they look for. And that's what you need to be looking for. I hope that helps. I appreciate y'all watching my videos. Hope they're helpful for you. I know just getting on here and trying to explain it, it certainly helps me to learn better. But there's your homework. Hope y'all have a good Sunday.